This is not a curiosity. This is not a footnote. This is not a coincidence. This is one of the most important signals of the last 25 years. Another one. Since the year 2000, central banks across the world have been quietly, methodically, and aggressively stockpiling gold. They've not been trading it. They haven't been speculating on it, not timing it, just buying it. And the countries leading these accumulations are telling us something profound about currency, geopolitics, debt, sanction, and the future of money itself. So this is a real story behind gold. What does the data actually shows? From 2000 to 2024, net addition to official gold reserves reveal a stunning hierarchy. At the very top, Russia with nearly 2,000 tons. China, almost 2,000 tons. Then there's India, Turkey, Poland, followed by a second tier. Kazakhstan, Saudi Arabia, Thailand, Mexico, Singapore. This is not random. This is policy. And the most important thing to notice is not who is buying gold, but who is not. Because gold is not about yield. Gold is not about growth. Gold is not about innovation. It is about survivability. Gold has no counterparty risk. It has no default risk, and it cannot be frozen with a keystroke. And since the early 2000s, three structural forces have converged. First, exploding sovereign debt. You can't deny that. Two, weaponization of currencies and payment systems. And the weaponization of the dollar, especially with the US versus Russia, for example. Third, the erosion of trust in fiat stability. Is the dollar strong enough? Are we losing the dollar? What about the euro? Gold is the anti-system hedge. It's a great hedge without getting into actual hedging through options and things of that nature. Central banks do not buy gold because they are bullish on commodities. They buy gold because they are bearish on the system itself. That is what you have to start thinking. I am not investing to make money. I am investing to avoid losing any. That is the ticket. That is how hedge funds operate. And that's how they're famous and make lots of money. Let's be blunt. This chart is dominated by Russia and China for a reason. Russia learned painfully that reserves held in foreign currency are not true reserves. They can be frozen. China understands something even more fundamental. You cannot challenge a dollar-centric world order while holding dollar-centric assets. You're holding the very thing that's making you dependable on them. Gold allows strategic autonomy. Gold allows monetary sovereignty, and gold allows insurance against sanctioned trade wars and financial fragmentation. This is not about replacing the dollar tomorrow. That's what they tell you. This is about reducing exposure to a system that is increasingly political. And don't forget to subscribe, give me some thumbs up, and join my Patreon channel. Definitely, to support this channel. So, what is the emerging market signal here? What is this thing trying to tell? Well, notice something else. Many of the largest buyers are emerging or middle-income economies. These countries live closer to currency crisis, inflation shocks, and capital flight. They understand what developed economies have forgotten. That fiat regimes are fragile under stress. Gold is not there for prosperity. Not buying gold because they want to sell it. No. Gold is here for disorder. Start looking at it the other way. That is the reason why this channel was created. This channel was created, the Black Swan channel was created to look for exactly what is the market trying to tell us. And it's telling us right now, buy gold. Oh, okay, so I could make money. No, we're not here to make money from gold. We're to protect ourselves with gold. right? Gold is here for disorder. When central banks that manage inflation, liquidity, financial stability choose gold over foreign bonds, they are making a statement. We trust metal more than promises. Right? I mean, so what does this mean for the dollar system? Well, this is not a sudden collapse story, right? This is a slow erosion story, and it's happening right in front of you. Gold accumulation does not kill the dollar overnight, right? It doesn't. But what it does is that it actually it weakens the margins of trust. It reduces reliance on U.S. Treasuries as the sole reserve anchor. That's what it does. And that's an important consideration, right? It creates optionality in a fractured world. What does that mean? Well, what else can I do? Stop thinking about gold as a way for you to make money. Think of gold as a way not to lose any. That's the idea of this channel. The dollar remains dominant, right? Obviously, but dominance is no longer unquestioned. Gold is the escape valve. Why retail investors are always last? Well, like you, right? Retail investors debate gold when prices move. Should I buy gold? Should I not buy gold? Is gold going to keep going up? Central banks accumulate gold when risks rise. That's what you should be doing. The only problem for you is, how do I measure risk? I could measure gain. I know if the stock goes from 10 to 20 or gold, goes up from 1,000 to 2,000, I could see it. So should I buy at 2,000? Should I buy at 2,500? One thing that you do not see, and they do not help you, is what is the level of risk in the system? And this is where this channel basically helps you, tell you, well, there's risk with, currencies, and there's risk with the dollar, and there's risk with the Fed and the interest rates and Bitcoin, right? The risk is everywhere. You got to see it to decide which one you need to worry about. And then, of course, the biggest risk of all is 37 trillion worth of debt. So retail investors debate gold when prices move. Okay? And central bank accumulate gold when risks rise. But by the time gold becomes obvious, the accumulation phase is already complete. This chart shows you 25 years of advanced positioning. The question is not, why is gold rising? The question is, why were central banks preparing decades in advance? So the message that you're supposed to miss, basically, is that gold is not being bought because of inflation prints. Because that's what you hear all the time, right? Inflation hedge. It is being bought because of systemic distrust. It's not about trades, it's about architecture. When central banks behave like this, they are telling you something quietly, that the world ahead will be less stable, more fragmented, and more political. And in that world, gold doesn't need to outperform. It just needs to be there.